Apple is one of the largest companies in the world with a market cap just above $3 trillion, with $162 billion of cash and investments on its balance sheet and $95 billion of debt. Their enterprise value is $2.95 trillion. Meanwhile, Apple has reported $383 billion of revenue over the last 12 months, $97 billion of net income and $99 billion of free cash flow. So Apple's stock is currently valued at almost 8 times revenue and 31 times earnings. Despite the high valuation, Apple's performance in recent years should give investors some concern. The market for smartphones is maturing, and last year global sales fell by 5%. Apple's last 4 quarters have all seen lower sales than the year before, and the latest iPhone 15 has failed to reverse that trend. Meanwhile, the company is facing investigations from regulators, and its new product, Apple Vision Pro, is likely to be a flop. The gadget may have cutting-edge tech, but VR headsets lack the convenience of a smartphone, and they give some users motion sickness. According to Circana, sales of VR headsets and AR glasses tanked 40% last year. Another risk worth mentioning is China. Not only does China play a part in manufacturing, but it also generates 20% of Apple revenue, and recently there were reports that Apple was discounting its products there. Lastly, Apple's valuation is also questionable. At 31 times earnings, the company is trading significantly above its long-term average. Between 2010 and 2020, that PE multiple rarely went above 20. To be fair, Apple has also managed to increase its profit margins over that time, and its huge pile of cash allows it to buy back an enormous number of shares. And despite all the risks, there is one way that Apple could reinvigorate its sales. If Apple can introduce generative AI into the company's next set of iPhones, that could unleash a wave of new demand and get sales back on track. Apple didn't raise prices last year, so that is another option the company has to boost revenue. Let's assume Apple can grow its earnings in line with its 5-year average of 10% per year, then trade at a similar PE multiple of 30. In that scenario, the stock would be worth roughly $4.7 trillion in 5 years' time. Include dividends and the return works out to around 10% per year. So Apple may not deliver spectacular returns from here, but I do rate the stock a buy. But these are my personal opinions, not financial advice, and I hold no position in Apple stock. For more investing videos, make sure to visit my website, 3minutebreakdowns.com. Thank you for watching.